Welcome back. You're with us here on Opening Fire. You've got the market, which is down 127 points. So there is actually a fair bit of recovery which has happened from the low point of the day. But it's still looking weak. I mean, there's no real enthusiasm whatsoever at all. I think that can be said. One stock which is, kept on falling, and in a pretty dramatic way. And the big fall really started in December 2015. Is Justdial. Justdial was 1,000 rupees in the beginning of December 2015. It's half from there. 477 now. It's seeing a big move up now, 8% higher. Go back in history, Justdial traded as high as 1,900 rupees. So from 1,900, it's lost some 75-80% from to where it is trading right now. We've been talking with the management over the last couple of years. I've got Mr. Ramkumar Krishnamachari, CFO of Justdial, joining us on a phone line. Mr. Krishnamachari, thank you for your time. Good to have you here. Prashant this side. So any thoughts on what's happened with the stock recently? I'd like to hear what you make of it, because this is, I understand, you run the business and you look at the business, but this is pretty devastating for shareholders.
Certainly, a lot of wealth has got lost in the process, and I think, honestly, our belief is that the market reaction has been quite disproportionate to the kind of, from what we see from a fundamental standpoint of the business. Now, if you look at it, 20 years of execution, 2 bad quarters, we missed numbers, on the revenue top line growth. I think, honestly, we were surprised by the kind of reaction of the market and of the volume, the way it has gone about in punishing us. Look, imagine I have a net of a buyback, I have 800 crore of cash, and then my business is valued around 2,300, 2,500. It's quite dramatic in the way it has, the reaction has happened. But I must tell you that fundamentally nothing has changed from business standpoint. What has happened on the top line growth is, yes, our execution on the not scaling up adequately in advance to make sure that the 20-25% growth in the volume of paid campaigns continues. That unfortunately, there was a delay, as we admitted, due to preoccupation with building up the product. And now that has been rectified, that course correction is already underway. Only way now I can prove is to show the numbers, and definitely as we speak in this quarter, you will see the numbers improving. And we are quite confident that once we get our sales force back in place, the growth will be back to 25%. So I think, I guess a culmination of global factors as well as company-specific factors has resulted in this kind of a overreaction regarding my stock. I guess these are all part and parcel of the game. If you look at 3-5 years down the line, we are building the company for the long. I'm sure, we will only grow from strength to strength from here.
So I just want to focus on, first of all, you said your net cash is what? 800 crores?
Correct. Net of buyback. So currently I have 950 crore, and 150 crore, if you set it away for buyback, I'll be left with 800 crore.
On the sales force front, what is the total sales force now? How many people are you planning to hire? Can you just give us some numbers?
Definitely. So currently we have 6,000 odd total sales force, which includes 3,200 telemarketing and about 2,800 feet on street. Now that number will get added by 2,000 in the next 6 to 9 months. So basically a lot of the large portion of that addition will come from the feet on street. You have to remember, we have 16 million businesses. Unless you go out and reach out to them and you have a touch point, you convince them, you show and tell, about our product, people are not going to sign up. So there is, while for the past 2 years we have not added much, but still we have grown 20%. You can see there's some amount of non-linearity. But at some point of time, you got to have, unless you had, structurally scale your sales organization, you're not going to get to that 25% growth rate, and which is what we are doing right now. So the 2,000 odd addition to the sales force definitely will get us back to that 20-25% growth rate. So it's only a matter of time that we spread ourselves deep into both in existing as well as the tier 2, tier 3 cities.
Where is the advertising push, the marketing push that you were talking about, Mr. Krishnamachari? You've been talking about for the last many quarters?
Quite some time. So on February 25th, we are launching what we call the our flagship Omni product for small business. In that same event, we are going to be launching our latest version of our app as well, which we call the launch version, for us to go to the mass market, mass communication. So the mass communication should definitely start sometime, late March or April. We should start the full-fledged advertising campaign.
So your revenue growth, just to go back to the point, in 17 should be between 20 and 25%, and you can maintain that, you think, over the next for the foreseeable future. But to begin with, 17 revenue growth should be between 20-25%.
So what we are saying, while both possibilities are there, it's possible we have conviction that it will get into the 20-25%. Sooner or later, sometime in 17, we will get into the run rate of 20% growth at some point of time during the period. But definitely, our own belief and conviction is we should be able to grow at that in that range.
Just one point, and this kind of is, of course, a question which something we discussed over the quarters. What caused the delay to launch the, to sort of back up the Search Plus business with marketing, advertising, just really go out to the market in a big way? What caused the delay over the last, I guess, 1.5 years?
Let us put it very simply. Unless you have a great product, there's no point going and spending and splurging money on advertising. You're very clear. Let the product drive the engagement and the usage. Advertisement will complement the effort. But unless you have a great product, there's no point going into the market. We felt, Money felt, our founder, that unless the product is ready, and it was not ready, it was in the making. We wanted to add so many features, make it as easy as 2-3 clicks, you're able to complete a transaction. That's what it is, which is what you're going to witness on 21st when, all the in front of investors and analysts, that we are, how easy and convenient it is for the consumers, ordinary Indian consumers, to transact on a Justdial platform, which is what it is. And that product is ready, which is what we're going to launch. And we are very clear that that we have no regrets not spending in the earlier this thing, because we believe that let the product be ready, let the product drive engagement, and then the game starts. And in the meanwhile, the rest of the market and the industry segment players, they have been spending heavily. And honestly, I think that's good for the ecosystem, because it would have created awareness among the consumers that you can transact online. And we are only going to come and tell them, here is the easier, convenient way for the consumers to transact.
All right. Thanks very much. Great speaking with you, Mr. Krishnamachari. Let's hope things recover a bit, and we'll be there to talk to you once again when that starts to happen. Thank you. Let's take a quick break here. We are coming back in 2. The market has continued to recover. Let's put the Bank Nifty intraday back up, please, and see what's happening there.